Hey there, traders and friends right around the world. It is James here with a special Tuesday afternoon market recap. The reason why it is special because we have rounded out the month of March. We have rounded out the first quarter of 2015. A very, very volatile quarter and also a very, very volatile month. It has been to begin 2015. Yesterday, we saw the market rally 263 points. On the daily, looking at the Dow Jones Industrial Average, it came as somewhat of a surprise. It came as somewhat of a shock. Today, however, volatility again moving down 200 points. The overall net movement for the market has resulted in about a 60-point positive type of move over the past two trading sessions, where the markets themselves have moved over 460 points. Volatility again continues. And sooner or later, we're going to see the market commit. It's going to gain traction. It's either going to break out above these declining lower highs, or it's simply going to close and start breaking below these swing lows, as you can see, which have acted twice as support in March. You can see these oscillations, for instance, on the Dow Jones Industrial Average are continuing to get smaller and smaller. I find this interesting because if we come back down to support, I do believe once again we have limited upside. We spoke about this over the weekend, and it's only a matter of time until the volatility gets too much and one direction gains the upper hand. Either the bulls or the bears are going to gain traction, either at support at this pivot point right here or somewhere along this declining trend line. So please pay attention to this particular point on the chart over here at the declining trend line or down at this support level. These are the two areas where the markets are going to commit, and it's only a matter of time until one direction or one side of the market is finally going to win out. And when that does occur, it is going to be an explosive move. Given what we're seeing on the Dow Jones Industrial Average, the type of chart pattern, it's looking awfully lot like an intermediate top on the market, and that we may see or may very well see those lower lows priced into the market, even again going into or as early as this coming Thursday. We may start to see those closes below this lower level. That's what I'm really looking for on the Dow Jones Industrial Average. You can see the same type of picture taking place in the S&P 500, and a long day inside day type of candle. We're down 18 points. In regards to yesterday's candle, again, volatility is continuing to increase. It's still playing out as we expect somewhat. We came into the week somewhat bearish, and again, yesterday's candle came as somewhat of a surprise, but given today's neutral behavior and really mitigating most of the gains seen on Monday, we're really back at that pretty neutral type of position, not only location-wise on the chart, but sentiment-wise and position-wise in individual trades. The only difference at the moment between the Dow Jones and the S&P is the fact that the Nasdaq had a very strong gap, between Friday and Monday's trading session. Today we have filled that gap. So although this is a very bearish candlestick, generally what happens is, you can see right here, when you fill a gap, it generally can act as support. Now this isn't a good example because you can see the bottom or the capitulation fall out on Wednesday last week, but generally when you fill a gap, it can be somewhat bullish. So I am somewhat cognizant of that. It's only on the Nasdaq, and the gap may just be really an extreme sentiment shift which occurred on the back of that central bank intervention, or the speech, or the dialogue anyway of the Chinese sort of stimulating growth or economic activity within their own economy. So we'll pay attention to that on the Nasdaq. In the way of individual trade setups, a lot of stocks are still grooming very, very nicely. You can see that downtrend line on Apple, which we have been paying attention to. Again, it looked like it was, building a little bit of strength, but today completely negated. Inside day, long day candle down, close to $2. Volume isn't really there on Apple. I mean, it's somewhat strong. It's more or less the daily type of volume which we expect being traded on Apple, but you can see again that downward trend line again still in effect, and it looks as if we're getting into some form of a descending triangle or maybe a wedge. It's not enough to trade using or trading off from yet, but it's something which I'm definitely paying attention to. Still looking for the sweet spot down here, about 120 on this particular stock. Amazon today has got another shooting star candlestick, decent volume as well. Selling pressure, selling pressure, selling pressure. Is this what we call a bear flag, which resolves itself to the downside? That is what I'm paying attention to on Amazon, so should you. Having a look at Boeing Airlines again. Yesterday, like many stocks, very nice bullish days, but again, Tuesday's price action completely negating the price of Boeing Airlines. This is what we call almost a tweezer top. It's somewhat in the right location. What happens is you break down, you retest at an old support turn resistance level and then you fail, this again looks like some form of a bear flag. Yesterday's candle doesn't really help the the bear flag argument, but definitely today's candle is giving it a little bit more validity. So pay attention to Boeing Airlines. I still like the overall chart setup. Baidu was completely flat in between those two, channeling support and resistance areas. The same is true with Caterpillar. Again, people were getting excited about this yesterday. Said, look, hold on to your hats because the markets themselves, I'm still not convinced on the overall strength of the market. I do think it needs time to shake out. I've made that very public, very clear, and that's still my position and take on the overall markets. Caterpillar, as such, really took back all of the gains from yesterday. I mean, down $1.34. It was a nice candlestick, don't get me wrong, but the inside day today just completely negated that bullish move. Very, very flat on Caterpillar. Chevron, again, still a decent type of trade setup. It hasn't really made the move yet, but something I'm paying attention to. FAS I will make public right now. This will be removed from the list, and in its replacement will be Goldman Sachs. So there was the possibility of JPM, Bank of America, and Goldman Sachs. I've chose Goldman Sachs because I'm familiar with the stock. I do trade and have historically traded it, and it has taken preference over those other stocks such as JPM and also Bank of America, which I just alluded to. So Goldman Sachs will be the new inclusion. FAS will be rotated off as of this weekend. So I can't really, speak too much more about that. Facebook, for instance, again, another little bear flag. It appears to be still looking at the sweet spot, just like I was talking about on Apple. So pay attention to this stock. It looks pretty good as well. Google's looking quite weak, a little shooting star, but we're still at that support level. So pay attention to that. It looks like we have a double top almost with the neckline, and we're sort of sitting on that neckline. You can either get involved here, or what generally I like to do is wait for the retest. Well, let me just go back into the right type of chart right here. Generally what you can do is wait for the breakout or the breakdown. The retest occurs, and then you can enter or at least add to positions here when you get the subsequent rollover, which is generally the bigger move. So it's sort of like a 1, 2, 3, and you sort of add at number 2. So pay attention to that on Google. It will take a couple of days to set up. GoPro is just continuing its sideways market move. IBM, again, another shooting star, looking weak, but we are at a support level. And of course, we have an upward trend potentially to contend with. So these are one of the stocks where the market's looking weak, but you've got limited downside in my opinion, and it's more so going to be the turning and buy signal when the market gives us the signals to go long. So please pay attention to that on IBM. Netflix today had a very, very weak day, down about $6 or $5.88. Again, looking like bear flags and very, very common. You've got this support level turn resistance, finding resistance. Volume is still there as well, which is good to see. And Netflix is exceptionally, exceptionally weak. We're making a series of lower highs, right? Lower lows. We're sitting right on that 200 simple moving average. Please, please, please just mitigate risk on this Netflix trade. It's still looking very good. It's still a trade which I genuinely like. Very good targets, 403, 383, and then as low as 350. 403 is the first great target, and you could take some positions off at this level. But the biggest sort of move that I'm really paying attention to is 350. We're obviously going to go through some oscillations until we get there. I'm not saying that it's a foregone conclusion that we will hit 350, but just monitor the daily price on Netflix and move your stops in conjunction with the relative moves or the momentum moves made on these individual stocks. To conclude with, we have Tesla. And again, surprise, surprise, no real net movement. You can see the optimistic day on Monday, rallying off from support, but again, struggling to make any conviction. And it's really head faking a lot of people. So please keep a level head when you're looking at these markets, looking at these highly volatile markets, which aren't trending. They're just moving back and forth, whipsawing novice people who do not know what they are doing. It's best to stay in cash until the market makes that definitive move, either below or above these 2 points on the overall charts. At that moment in time, there should be conviction and there should be traction to at least usher in commitment one direction or another, instead of this back and forth whipsaw price action which is going on and which has been going on for the entire month of March, and also more or less for the entire trading year, the first quarter, which we've just rounded out for 2015. So that's a Tuesday afternoon market recap. If you have any questions whatsoever, email me success@pivotpoint-trading.com. Have a great Tuesday evening, everyone. I'll see you Wednesday afternoon for another market recap. All the best. Goodbye.